It's Market Day Report. We're so glad you're with us here this morning as markets are up and trading. All right, the corn market has been lower 2 consecutive days. We'll try to break out of that, but something has to turn here on a market that's lost 12% year to date, down 3 cents, 4.04 on the December contract. For what it's worth, it is above the $4 mark. But go to November beans, and we did get above $10, but back down to $9.97 and a quarter. But notice the range. We moved from $9.89 on the low side above $10. We trade $9.97 right now, and that's up 2.5. Since we're talking about beans, let's go ahead and go through the complex here. And soy meal contracts moving higher. They've been higher 3 straight sessions, while bean oil has been a little lower. And with the exception of the August contract, all contracts are in the red. Okay, to the wheat market, and we'll start with Chicago. Well, we could start with any of them. They're 5.5 lower across the board. 5.11 and a quarter is where we trade the front month September. September hard red, 5.5 lower, 5.11 and a half. And spring wheat, yep, mostly lower there. And then the cotton market is 60 higher at 67.24. You know, Chris Swift is with Swift Trading and just happened to find him here. Hey, Chris, welcome back.
Thank you, sir.
Okay, so we're looking at what's going on in our row crop markets, and obviously we've seen pressure in both the corn and soybeans. Corn down 12% year to date, and again, we start knocking on that door of $4. Is that a psychological mark?
Well, it could be. Generally, a different handle, the changing of a handle tends to be, but I'm looking at it from a kind of a different perspective. We already know what we've got this year. Pretty much the crop is in the ground. All of the conditions look fantastic to it. Anywhere between a 181 to a 185, 186 bushel per acre yield. Everything looks fantastic, and yet we think about, well, what kind of does that incentivize us to next year? Does that really make me want to go out and plant corn at that level for next year? And the answer is no, it really doesn't. So when we look at those end users that use corn, use soybean meal, soybean oil, why not start looking at, boy, I'd like to have some of this price next year. And that's what I'm kind of considering now. Now that we're at these lows, we could be hitting a harvest low sometime in September, early October. We know what the corn crop is going to be. We pretty much know that the bean crop is going to be short because of the amount of acres out there. So I'm continually focused on the 26 crop years more so than I am this year. And actually from a buying standpoint, we already know we got cheap grains this year, and I've got the cheapest that I've got right now. So let's try to put some of that in the bank for the next year.
Okay, now for those who are outside of the daily marketing, if you will, they may not understand how some of this works, but you can do contracts, you can do
cash forward contracts.
Exactly. There are a lot of different methods here.
Well, and options are probably the easiest because an option gives the buyer the right, but not the obligation to have to buy or sell a futures contract. So if an opportunity arises, it would be nice to have that option available to me that I might be able to take advantage of. If I don't own that option, I have no option available to me. I've got to take it at whatever the face value or market value is at that time.
Okay. Now, that is the opportunity looking forward. What about the opportunity when you've got a high price and you're trying to protect yourself? And guess what? We're going to have that answer coming up in a moment.
Next. All right.
Market Day Report continues after this. So, show list for cattle, cash cattle, lighter in Texas. We'll see a little larger in both Kansas and Nebraska, and that's where we'll start this week when it comes to the cash side. Let's go to live cattle futures, and we are higher across the board. 233.80 on that front month. It's up 290, but October is the most active at 227 and a quarter. It's up $3.15. And then we move to the feeders. Feeders have been higher 2 consecutive sessions. And look at this, 2 contracts above 338. 338.60 on the August, 338.02 on September. They're both more than $3.20 higher on the session. than the hog market. Hogs have been higher 4 straight sessions, trying to make it 5 today with the October at 91.62, up 72. In studio, Chris Swift, Swift Trading. Chris, earlier we were talking about ways to maybe start planning for next year's crop, ways you can do through contracts or options, if you will. Cattle market, we're talking about high prices here and trying to find a way to protect yourself. For those, again, who aren't in the markets, how do you do that?
Well, it's literally turned into a squeeze. I mean, you really have the short positions out there that either don't have the cattle or do have the cattle. They're either not making the money that could be available to them, or they are just losing out on opportunity on there. But it is a bona fide squeeze now. You have protectionism, that you don't have cattle coming in from the south in there. You have tremendous amounts of demand still out there. You've got money that is still being flowing out there left and right. So the actual squeeze on the market is there, and those producers that are still in it are looking at the most historical profits they've ever seen, and yet everything out into the future is projected at a loss. When we look at the spreads, production spreads between starting feeder, finished fat on there, they're the widest they've ever been, and today it's going to be even wider. When we look at what these cattle price is compared to the beef price, we see that cattle producers are in the $400 and $500 a head profit, and the packers in the $200 to $300 a head loss bracket on there. And all of that will explode at some point in time. We just don't know when. And to answer your question, a put option. Give yourself the option. You don't have the right. You do have the right, but you don't have the obligation to it. If you don't want to exercise that option, if you don't want to do anything with it, you don't have to. But you've got it just in case if something does happen, and there will be something to happen. Maybe not today, maybe not tomorrow. And it could be dollars higher before it ever goes down, or it could turn around tomorrow, reopening of the border, whatever that case may be, then you're going to probably have some kind of larger price movement than what we've already seen.
And then one final thought here on the cattle market. What are you watching coming forward?
Well, I'm watching for the herd expansion. We already have great evidence that there is already some expansion taking place on there. We know that those animals won't even be considered until this time next year, but it's the aspect of probably reopening the southern border. We saw last Thursday, I believe it was, when President Trump and the Mexican government kind of got together on a few things. Well, that maybe opened the door for future aspects to take place, and the market went limit down on that news that said nothing about the border being reopened at all. But we know how contentious that is, needing those cattle to come in here to the United States. And some people going, no, we don't want those cattle here in the United States, because clearly that might break the death grip that's got the market right now.
Well, we're living in an interesting time. There will be books written about this.
Absolutely. The volatility is amazing. And we take one look at copper last week. It moved 18% higher in one day in July, and 2 weeks later it moved 20% lower, with the bulk of that in 5 minutes. So you just can't take anything for granted these days.
Well, there's one other market that's done that, and that's orange juice.
Yeah.
Orange juice is crazy volatile as well. All right, Chris, always great to see
Absolutely.
you. Chris Swift is with Swift Trading. All right, that's how we're
Glad we
starting.
have you guys here to help us make sense of it all, because a lot of moving parts. Thanks, guys.